Joining us now to discuss BTC price and more is Mark Connors. He's the head of research at Canadian investment manager 3IQ. Mark, great to have you. So we're seeing a golden cross, could be bullish, or is it just a bear market rally?
Well, we're always hunting for signals anywhere, right? I mean, since the dawn of time, throwing entrails on the ground and seeing what the gods tell you. But yeah, golden cross is a big tea leaves. Yeah. Everyone uses the tools that they're used to. The problem with using some of the TradFi measures is that, Bitcoin in particular, it's an exponential grower. It just behaves differently. So while I agree with technicals, we're looking at different ones. And just to give you an idea about the unique return profile of Bitcoin, where you'll see the S&P 500, since that's the analysis you used or presented as also a golden cross, it has a relatively normal distribution. Like if you look at a graph of, say, monthly returns over the past 5 years, you might see something like, the 99th percentile on both sides is like, I don't know, up and down 7%, let's say. For Bitcoin, it would be, say, down 20, up 60. It just has more positive return profile. And that's because we believe as adoption grows, investors are pulling it, up and to the right. And that's why we think a 200-week moving average is better. So the point for you or for the investors on the call is it's even more opportunistic now. It's not even approaching the cross. It's still below its 200-week moving average. And we believe that it's as we get near that happening, which is a huge fundamental catalyst for Bitcoin, and we have no reason to believe it won't be again, that we'll see an even further move higher that would eclipse anything seen in TradFi.
Speaking of the pattern, we have a BTC yearly price performance chart, and it appears every 4 years we get a year of month of yearly returns where it doesn't look so good, but for the other three, looks pretty good. What trends are you seeing here?
Well, we're talking up our own book here because this was something that we put in our 2023 outlook. Just like you said, the 200-day moving averages and the golden cross, it's all backward looking. It's something that we use. Well, this also, we have to admit, obviously, is backward looking. But we use fundamental analysis to say, are the principles and the dynamics still intact that made this move in 2015 for a 3-year rally, in 2019 for another 3-year rally? And the answer is absolutely. In fact, more so. So I'll stop there, but we are buyers, and we haven't done the update to the graph where we now show 2023 is 45% up year to date. So the pattern actually is starting to continue.
We also see some patterns for BTC and ETH as well, compared to various currencies, commodities, equities, and rates. What can you tell us about some of the returns there?
So on these graphs, what we use this for is our thesis is that there's a problem in TradFi. It's terminal, it's trenchant, and it's the debt load versus demographics. This is not new, but it just got ramped up in COVID. And that's why we think over any 3-year period, now we think the data shows that adoption of this new, I would say, unspoiled asset in Bitcoin and its sister Ethereum are up on any rolling 3-year period. And that's the relevance of this in our outlook was that, yes, we had a down year, but if you want to look at the opportunity set, look what's happened over any 3-year period. Now, we only show the most recent 3-year period here, but the pattern persists. Bitcoin and Ethereum will outperform other traditional assets. It's not because we want them to. It's because the market is moving to them because they aren't spoiled by an indebted fiat system. It's just another natural extension of a monetary and technological advancement that we've had every 20 to 50 years.
Zooming out, we also have a chart on the U.S. debt to GDP since 1940.
Oh boy, not pretty. We shouldn't end the call on this one because this is not a fun one.
Oh dear. So, I mean, yeah, it's not looking too good. From the macro picture, how does Bitcoin fit in here?
So from a macro picture, what you have here is the response in '08 lifted debt to GDP from 80 to 105. So it's right on that precipice of saying, can we pull it back? Well, COVID just jumped the shark. No way. We will never be able to inflate, hopefully not, because that would be hyperinflation. We will not be able to grow out of this debt load. So it'll take an alternative. What it means for Bitcoin is that Bitcoin, I believe, is that layer, that option between a default, which is unconscionable, and further debasement. Debasement will just simply make that wage earner who's relying on next month's wages to buy last week's goods and services, which has not been a good trade for them because they're losing purchasing power and they don't own a house or enough stocks. So we think Bitcoin comes in as that layer for them to attach to. And we love to see municipalities and government agencies get off zero in order to help their communities as this becomes the settlement layer for Ethereum, and then really the new monetary layer of the internet with Bitcoin, among other utilities that we see in the future. So that's where it fits in. It's not of that world. It isn't going to have the same deterioration in purchasing power, just the opposite.
And yet we're also seeing the Bitcoin network continue to grow as we see the number of reachable Bitcoin nodes increase. What can you tell us about, I guess, the forecast of that growth amid uncertain times that we're seeing in the markets and various poly crises throughout the world?
So there will be. Unfortunately, we do see serial bouts of volatility like we've had in treasuries. What we're not showing is the Treasury Move Index, which has been historically high. We haven't shown the number of primary dealers in the US, which over the last 30, 40 years has declined. So adoption's decreasing. And we haven't shown the US reserve currency, which was dumped recently because of our profligacy. So we haven't shown that maladoption. What we're showing here is more and more players choosing to join the Bitcoin system and adoption going higher, which secures it. The part about that debt graph that you showed, which really hurts, it's a short-term answer of giving money today to pay for yesterday's problems, not even tomorrow's. What you see here are people joining it because they know what they're getting. They know there's only another 2.5, 3 million coins coming. They know that that it's low chance of being hacked, and they know the integrity. Where Satoshi coin is not Sam coin is what we're starting to say. So don't confuse the two. I know you don't, but as far as your audience is concerned,
that's a new one. I haven't heard that one before. But a lot of folks know 3iQ through their exchange traded fund ETP products. So Crypto Compare recently showed that more than $200 million worth of investments poured into crypto-related exchange trade products in January. So what kind of Bitcoin ETF action are you seeing?
We are seeing, we had more smiles. Our trader called us up the other day and he said, I got to head out. We have some trades to do. And then we all held our breath and I said, which way? He goes, the good way. So we had to bring in some new coins to satisfy inflows. So that was good. And it wasn't kind of crazy numbers. It was a nice, healthy number. We know some of the folks.
Do you see this as sustainable?
I do. I think the entry point is so good. If people are buying here, they're the type of people we want in, because FTX is still grabbing headlines. So the marginal buyer there's not really FOMO going on right now, even though we're up 45%. So I really like this layer of buyer coming in here because they've done the work. They're shaking off the FTX debacle as just a bad actor and a fraud like we haven't in any enterprise, regardless of fiat or digital. So I would like to think it's the work you guys are doing and we're doing, trying to separate the wheat from the chaff.
All right.
But no, I'm very confident of these inflows. All right, Mark, as being constructive.
Thank you for that very bullish take on Bitcoin. That was 3iQ Head of Research, Mark Connors.